Hey everybody, thanks for joining us tonight. I'm here with Troy McNeil, one of the founders of Option Omega. How you doing tonight, Troy?
Doing good, Ben. How you doing, man?
Doing good. So why don't we start, just maybe tell the audience a little bit about yourself.
Yeah, no, I'm Troy. Live in Knoxville, Tennessee with my family. We've got 4 kids, and recently last year quit my job as a software developer and started trading options, and had been trading options for a couple years and took the leap to do it full time. And in the process of it, me and my buddy at work, Rusty, was actually my boss, we were backtesting some stuff and realized that there were some holes in the system, and so we started working on that. But yeah, I'm just a dude from Knoxville, Tennessee with 4 kids, and it's anybody who has kids understands that's a job in of itself.
Yeah, for sure. So why don't you talk a little bit about Option Omega before we get into the webpage here, and why you started it, what is it, and where are you going with it?
Yeah, sure thing. So yeah, like I said, I started trading a couple years ago, and I got started. I'd be interested to know how you got started too, but I got started by reading Nassim Taleb, who wrote Black Swan and some other financial books, Fooled by Randomness. But I kind of heard about options via that, and he was an options trader in the 80s and did really well during the stock market crash of 87. And his big thing is tail risk hedging. And so I started down that route, and I got super lucky in that, like, the first couple of weeks I started trading, I was just doing tail risk hedging, and it was 2018 during Volmageddon. And so I did better than I should have done, just because of had just started. Didn't know what I was doing, but did okay. And from there, I was like, oh, there's other parts of options, selling options. Who would have thunk it? You could sell them too, not just buy them. And so selling options provides a lot more stability in some ways, but also provides a lot more risk depending on how you do it. And so as we went down that route and I started trading, I started to I wanted to find a way to make sure that it wasn't just completely discretionary. I wanted some sort of way to say selling options provides this great framework for probabilities, and I wanted to test the probabilities in a way that wasn't as unbiased as possible. So started trading, used some backtesters, figured out what an options backtester was, started using it, and I was like, man, this stuff's, I'm going to be a zillionaire in like 6 months. These trades are amazing. And realized after using actual money that something was off between the backtester and what I was doing. And going further along that, realized that a lot of backtesters use end of day data. And so with an options trade, if you're using end of day data and you're doing something 60 days out, that might be okay. But most of the income trading that I was doing was shorter dated trade, so 0 days to 5 days. And what I realized is just that most of the end of day data backtesters were just not accounting for the huge overnight swings, intraday swings, things like that. So coming from a software background, my partner and I, and then our other partner, Matt, we started to play around with it. We used the Oprah data vendor, downloaded it, and just started using software development skills. And we were going to do it just for ourselves, a tool just for us. But as we started using it, we were like, I really think this is something that's useful. Joining a lot of the trading groups on social media, just realizing that people are trying to figure out strategies and are trying to backtest strategies. And so as we built the tool, we thought it'd be great to be able to share this as well. So that's where we're at now.
Yeah, I think in the last couple of years, especially, zero DTE and shorter term trades have really become bigger as commissions have come down. So I think
is that how you got started? Did you do 0 day stuff or smaller data to start? Or
no? So I got started actually with Robinhood. A buddy of mine got into it, and so I started learning about options through there, and I started with buying options and trying to make it big, and obviously I didn't. And then, learned about Option Alpha and tastytrade, and they're big into the selling options, and got into it that way. Found some Facebook groups, and then met Tammy, and so I've only been I started 0DTE right after the COVID crash. So it's been about a year now. Or 2 years.
Awesome.
Excuse me.
Yeah. I have a feeling like we were having a little business meeting in Knoxville one time. We were getting coffee one morning to talk about strategy, and me and our other partner Matt were getting coffee, and we were at the checkout, and we were talking about options and things like this, and the barista said, "Oh, do you guys trade options? I just started trading options too." And I think a lot of people post-COVID just went down that route and started. And so I think it's a great opportunity for people who teach options, who have strategies and things like that. It's just, in some ways it's the Wild West, but it's pretty exciting.
Yeah, the biggest thing is the education part, making sure that people understand the risk and involved. I know something that's popped up on the Facebook group is using stops, and I was going to use Option Omega to showcase some of those things with backtesting, and it's all about what your plan is and what your risk tolerance is. If you don't use stops, typically you're going to have bigger profit at the end of the year, but you're going to have a lot bigger drawdowns. So it's being okay with those drawdowns and making sure that your account doesn't blow up. So that's the thing that I really like with Option Omega, is how quickly I can try different stops and different parameters and see how that changes things.
Yeah, I appreciate it. That was one of the things that building it, we were very much in our own trading strategies trying to test, like, there's a world of difference between a 100% stop and a 200% stop on credit received and things like that. And so going down that route, it was pretty mind-boggling, the things we figured out along the way, and mind-boggling to hear people using it now, figuring those things out too, which is pretty wild to us. So
for sure. Well, why don't we jump on the website and maybe walk us through and talk about the different plans and different things like that.
Sure. Can you see my screen?
Yep.
Okay. Yep. So this is the dashboard, and basically when you first start, you don't have any tests, you can create a back test. And so we can just run through one real quick just to show everybody how it works. So right now we have SPX and SPY. Pretty soon we're going to be introducing IWM and QQQ. We'll probably do a couple more down the road too, but definitely IWM and QQQs are coming along. But right now we do SPX and SPY, and part of that is just most income traders I know, are largely doing SPX and SPY. I know some people do futures like MES and things like that. It's harder to put that in a back test from a data perspective. There's anybody who's traded like MES futures, the bid ask is pretty wonky, so it'd be really hard to trust those results. Whereas SPY and SPX are super liquid. So anyway, you can do SPY and SPX.
The nice thing about that, sorry to interrupt, is they're all correlated with one another. So, you can use SPX and it should carry over to MES and ES as long as, you mentioned the bid-ask spread. So especially overnight, it can get really bad, but it's one thing. That's one nice thing about the S&P 500. Yeah,
that's not it. Yeah, and the other part is we would have to monitor like overnight stuff, which you would just be getting fills at 3 o'clock in the morning for horrible reasons and things like that. So anyway, but we can do just year to date. You can do COVID crash. You can do anything from 2013 to today, but we try to come up with some dates that are common things that people want to test. So testing year to date, and then we have some. Oh, sorry. Go ahead.
Yeah, sorry to interrupt again. So you mentioned through today. So how soon does the data update so that when is today's information available?
That's a good question. I should actually say yesterday. You can do it through yesterday. We have a nightly feed, so today's action will be available tomorrow, to backtest. So that's a good question. And then we have a place for common strategies. So you can do a calendar, double diagonal, go down the list. These are just things that we know a lot of people trade, or you can build your own. And honestly, that's what I do most of the time, but people can do different things. So when people see this, sometimes it can be overwhelming. We're actually making a video on it right now, but this was actually the first part of the backtest. I thought, like, what is visually the thing that you could just make it as powerful as it can and as simple as it can in just one line. And so what we've tried to do is to say, like, you can sell a call, buy a call, sell a put, buy a put. And so you have a quantity. You can do it by delta. So say, for instance, you wanted to sell a 25 delta put. Let's just, for fun's sake, because otherwise the margin's going to be crazy. Let's just do it in SPY. So
one thing to mention with the delta, so you say 25 delta, for people that are newer, that is 0.25 in the option chain. Yes,
good catch. Yeah, options, 100 shares representative. So anyone who's traded ES, it gets real confusing real fast if you're not used to that. But so you can do it by delta. You can do it by percentage out of the money. And so say, instead of a 25 delta, you could say, I want to do, I want to do something 30% out of the money or 20% out of the money or something like that. You could do it by fixed price, where you could say, I want to collect $2. So find me the strike where I can collect around $2. For a lot of personally, I do just delta trades and things like that. And so you can do this in a couple different ways. You can do it by, say you wanted to sell a 25 delta and you wanted to buy a 15 delta put, and this is 0 day. You can put the days to expiration. You can have different days to expiration if you want to calendarize it, or if you want to do like a time spread, you can do that. We also have this thing called linked legs, which is how you would do, say you want to sell a put credit spread, a 25 delta put credit spread, but you want to do it 10 points wide, or in the case of SPY, you wanted to do it, $5 wide or something like that. You would do it that way. And that way, what that's doing is basically saying, this is a child leg, this is the parent leg. In a similar way, if you wanted to do a calendar of the same strike, you don't know what the long strike is going to be. So you do the short strike and then link it to the long strike. Does that make sense at all?
Yeah, that makes sense.
Okay. And so just to test real quick, we're going to sell, I don't know if this could be a great trade or a terrible trade. Year to date, we're going to sell a 25 delta put and buy the strike $5 away. 0 day, let's do this. You can do different times a day. Our data is 5-minute data. So we started at 9:45 just because the bid ask is a little wonky.
And that's Eastern time.
Yes, sorry, Eastern. So Wall Street time, or market time. You can do it a couple different ways. You can do this every day. Of course, 0 day, you're going to do it 3 days a week up until, you'll know better than I do, Ben. When does Tuesdays, Thursdays start?
So I think it's the 18th or the 25th is the first Tuesday, and then there will be a Thursday. That's just going to be a test run to make sure everything goes well. And then I'm not sure when they're going to do full time.
Okay.
But in a couple of weeks, we'll get our first taste of it.
Nice. Yeah, and so we'll have that data. You'll be able to run 0 day backtest 5 days a week. But you can do this daily. You can do it where if you said, I only want to do this, every Monday or Mondays and Wednesdays, Fridays, whatever. Or you can do it monthly. So if you're doing like OPEX, you could say like every third Friday, I want to make a play of the month or something like that. But in this case, since it's a 0 day, we're going to use the exact date DTE. We're not going to try to find the closest thing. We're just only use 0 days when there's 0 day expirations. There's a couple different things you can do with this. So we have an allocation kind of calculator built in, which is very useful if you have a if you have a trade that you think is really good. It's a good thing to do to be able to test the allocation, because there's some trades, and people are like, their mind is blown when you do this. Like, there are trades that you can do that have a 98% win rate, but if you use a 30% allocation, you'll go broke. And people don't realize that a lot of times. And so we put that in there, just that's part of the strategy. But just for the sake of it, you can also say, well, let's just see what would happen. Forget all of this stuff. Let's just see what would happen if we just did one contract at a time, which is helpful. You can also say, like, I only want to have 10 of these going at one time. You can do that as well. You can do, you can put it based on different VIX levels. So you could say, like, I only want to do this with a VIX at least at 20, or like the VIX as high as 30, no higher than that. And you can also use technical indicators. So you can use RSI and moving averages, and you can compare those as well. So we have 20, 50, 100, and 200, and you can compare those two, you know.
Yeah, I personally like using the VIX because you can set up multiple different back tests, and it's really easy to see how it changes with different VIX levels. So I really like that feature.
I appreciate it. Remind me to tell, one of the things we're thinking about putting in is a VIX contango, like Boolean. So basically say, like, just do it when VIX is in contango, or sorry, when VIX is in backwardation, because it gets pretty crazy. Like when the VIX was at 36, you know, it's interesting to have like a VIX at 30 in general. You know, that means something specific for the market. But in particular, the fact that it was in backwardation is the thing where you can really start making some interesting plays on it. But remind me before we get off too, I want to tell you about the feature we're working on right now, because that point about running multiple tests, we're working on a thing called portfolio. So if I get through this and forget, just remind me of that. But so exit conditions are the same thing. You can say, like, I want to take 10% profit, or I want to get out at a 20% loss. You can also do what you did on the entry. You can say, like, I want to get out if the VIX gets below 20 or gets over 30. Same with the technical indicators. Or you can say, like, when the short is tested, I want to just exit at that point. And then we have some things in here that actually do make a difference. You know, you can put, depending on your broker and your fees, you can put your fees per trade and see how that would have affected it. And because it's a sorry, go ahead.
Oh, sorry. With the commission and fees, when you put that in, is that per leg or is that per trade?
Per contract. Yeah, it's per contract. So you would basically say, like, you know, if Tasty works, it's $1 per contract. It's, you know, it's a little tricky because every brokerage has its own thing. So like Tastyworks is, I believe, capped at 10. You know, so it's an estimator, but at least it's helpful in the sense of, like, it makes it harder to be profitable, so you can trust it more, if that makes sense.
Right. Yep.
Also, because it's a simulator, like, there are days just the data was crazy. Like March 2020, the bid asks are just getting wild during the day. So we try our best to calculate that and say, like, hey, I don't know how well you could trust this trade in particular, this date. So you can ignore those to build confidence as well. You can also close any open trades when the test is done, to see whether they're winners or losers. And then just some other ones down here, just, you know, cap your profits at the profit target, just to see basically if you had run a perfect test every time, what would happen. And then if you want to collect like a entry, you say, like, we're going to try our best in the back test to collect, say, for instance, instead of a delta, you said, I want to sell a $2 credit. You know, we're going to try our best, but there's times where it's like you're going to get $1.40 or $1.80 or $2.20 or something like that. This just says basically, like, no, I'm serious. Don't take the trade unless it's $2, and that's how it works. So You run that, and big loser, giant loser.
I just wanted to say before we look at that closer of how quickly that ran. This is 42 trades, but the amount of data that it's going through, it's very quick.
I appreciate it. Yeah, Rusty and I, being software developers, that was one of the things that, like, it just has to be quick for us for it to be worth it. And so we've tried our best to, and anybody who wants to like look at data, just looking at the SPX or SPY option chains through history, it is an insane, you'll lose yourself. So I don't recommend it, but it's a lot of data, but we've tried our best. So yeah, you take it to the result page, and this is what you get. You basically, we'll show you the dates, we'll show you the strategy, the legs that you actually put, and then all your entry and exit conditions. And then we just kind of give you some metrics to look at. So your actual P&L of what the trade through time was, your win percentage, what you started with, what you ended with, what you had at the most. So, some trades you're going to be up like $400,000 or something crazy. And then your minimum funds, you're going to have huge drawdowns. And so we try to give you that as well. And then just your total trades and your winners of those trades.
Yeah. And one thing I had talked with you a little bit earlier on is that max fund and min funds is nice, but having a max percent drawdown would be good. Because if you start a trade not on, so this is January 1st this is April 5th this is January 1st, year to date, sorry. But if you started at the end of January, you'd be better, but because this trade isn't good, but there's a scenario where you start at a horrible time and you have your max drawdown right away, but this doesn't show you except with the graph.
Yeah, we're thinking through that, and that's one of the things we're working on. It's doing almost like a peak to trough kind of thing of like how low you went. I know we had talked with Tammy Chambliss, and that was one of the things she had asked for too. And so thinking through that right now. But yeah, that's great feedback. So yeah, we'll show you your average per trade overall, the average winner, the average loser, your max winner, your max loser, and then obviously with 0 days. Your average days is going to be 0, but say for instance, it gets really interesting just to show you another one. This is just like a vanilla iron condor. And so if you look at this 25 delta, 45 days out, it's almost kind of like a Tasty works, like a Tasty trade way. If you were going to do, condors and stuff like that, 45 days out, doing 25 delta, this isn't exactly Tasty trade, but, 10% of your portfolio, exit 21 days to expiration. And what's interesting about that, this is where it starts to get, you start finding some fun stuff. So you would think of 45 days to expiration, it's going to take a long time to see anything. But where that average days in trade gets interesting is you start realizing about how long it'll take, how long when you're actually trading to start thinking like I should start seeing some profit, my target profit, in this case 10%, around 2 days, and I find that helpful in my own trading. Just expectancy is half the battle of like, why isn't it taking so long, things like that. So it's good to see these averages. But we give you your funds by date. So if you had started with 25,000, where were you at in the process? And so, like you're saying with the max funds, you got up to 30,000, 325. You dipped below 25 at some point, but this is just the visual representation of that. And then what you can do is you can end up going through the trade log, and you can see every trade, how it worked. You can see what time it was put on, what time you got stopped out, and then of course your premium and where you bought it back at and things like that. So it's helpful to see certain trades, like, but it's interesting to me and things that we're thinking through how to visualize this better. But are there trades where you're getting stopped out at a certain time? Particularly 0-day trades or 1-day trades. Is there any kind of like seasonality to that where it's like, all right, I always lose around 2 p.m. Just things. The whole point of it is to say like things that make you a better trader. And so,
right. Yeah, I like that you can also see each of the trades that it's pulling up, so you can quickly go through and make sure that there's not one bad trade that's really pulling the averages down or anything like that, or anything wonky. I've looked through a lot of back tests that I ran. I haven't seen any big issues with any trade that was placed through the back tester.
Good. I'm glad to hear it. One of the things that's we've learned along the way of like launching it is just it's really easy, and we do this too. Everybody, it's very human. Everybody tries to game it in some ways because it's a simulation. You can go wild with it. You can try all sorts of things with it. And so, we've had people send us tests to be like, man, I'm Jeff Bezos in like 3 months with this condor, this special condor that I did. And one of the things that I've realized really the power in backtesting, it's not about finding that extra special trade that has this one kind of gotcha. Like it's actually, the secret is to put it on at 140. The secret to it in my mind is it's kind of almost like via negativa. Like I want to keep throwing things at this trade and see when it loses. I want to try it at different times. And the point of it is to build confidence. So it's like, well, this trade, whether you put it on at 10 or 1, it's not the difference between a winner and a loser. Some trades that people have sent us are the difference between a winner and loser. And so allocation percentage, just throw in as much as you can at it. And it's not so much about finding the perfect trade, but it's about finding the right pattern for you as a trader. And that's what we're trying to do with it. So, because it's easy to gamify it and be like, I made $6 zillion with condors, Right. Like, no, you didn't. No, you didn't. I promise. So anyway, but that's it. And along the way, you can save the test. You can say, put a description in it. You can also say, create tags. And that's helpful just as a quick way to visualize things. So obviously there's just one, but you can select tags here. You can filter. And then obviously if you have 40 or 50 tests, just a quick way to filter by, can I look at all my condors? Let me look at all my calendars. Just ways like that to organize it.
For sure. So then could you go through, let's say you did a back test last week and you want to tweak one condition, just go through how you would quickly write that up.
Sure. Yeah. So we once you save it, it's in your dashboard. And when you click on it and you click new back test, we actually take that exact test as a starting point, and just for the ease of time. And so if you click on a test, say you have 30, it'll take you to that test. You click new back test, and we basically put everything back into that now. And so what you do is just go in there and say, you know what, I actually want to see what this did. Let's see what this did when we took 20% and 40% stop loss. We'll run that. This one's a little bit longer test because it's since 2018. And it's going to take you to the result, and that's an unsaved result, but you can run again from there. Yeah. So that is a loser. That small change goes from a winner to a loser. So we say, well, that didn't work great. I'm going to go back to that, which I know was a winner, but this time I have this exit at 21 days to expiration. I'm going to take that off, and I'm going to run this and see what it would look like.
I just had a thought while you're running through this. If you have different users, is there any way or anything planned that you could share a back test with someone else?
Yeah, we're trying to think through almost kind of like sounds cheesy, but the idea I think is good. Like a trader hall of fame, or like a trade hall of fame almost, where you can share something and then it's public on the website to basically say like, hey, and in some ways I think that would be helpful because you can test some things out. You can, share it with friends, if you're looking through, obviously like on Facebook, just huge discussions around certain trades. So that would be helpful. But then also it kind of does the thing, a self-policing thing that I think would be helpful, where people are like, hey, look, this is a zillionaire trade, and people can tear it apart. And that's part of the good work of trades in general, is to look at things and be like, no, not really. So yeah, that's definitely in the works. We're trying to think of the best way to do it, but for sure. So yeah, this one, let's just save this. We're going to do this, Iron Condor without exit at 21 DT. I also can't spell. And so put the Condor tag on that. We're going to save that. And so now when you go to your dashboard, you have two. You can see it via these cards, or you can do it via table. It's very, very similar results, whether you exit to 21 days or not. And the reason for that, if you look at the days, the average days to 10% or a 12% loss, and this is just by running a million tests, I can quickly kind of figure this out, is you were never getting to 21 days DTE. The average day for profit was 2 days. And so it didn't make a difference at all, We could do that again. We could say, well, this time I want to look, and that was a 10% allocation. I want to run this at a 50% allocation and see what would happen. Okay, and this is my favorite. This is actually my favorite part of the whole thing, is I just think allocation percentage, people don't think about it at all. They see a probability of winning, and then they just pour more money into it. But that's not how probabilities work. Probabilities work. And so allocation percentage is half the battle. It's half the strategy. And so what you can do then, well, it's like, well, a 20% worked, 50% doesn't, does the 30% work? And this is kind of just like, in my mind, I see it as craftsmanship, just building. You're trying to build a strategy over time and trying to beat the crap out of it as much as you can. So anyway, that's how you would do that. You can also, of course, say like, well, 25 delta worked. What was if we did 30 delta? With a lot of your trades, are you doing deltas? Or are you doing, percentage, fixed price?
So I've done, I used to do about 10 delta on the short, but then after running some more back tests before option omega, I found that 5 delta gives you very, very close to the same profit. It's a little bit less, but the variation or the drawdown is a lot less. So there's a little bit less profit, but a lot less volatility, and I like that.
Yeah, so, smoothing it out a little bit.
So, yep, I do 5 delta shorts, and then I buy the first 5 cent long. So my put spreads are 100 points wide, and my call spreads are 50 points wide.
That's super smart. Yeah, I love that. That's one of the things that I, especially in March, really the early part of March, when there was 80-point swings a day and VIX is at 30. Testing butterflies during that period is really interesting to me, like out of the money butterflies almost. You kind of you start seeing some of the asymmetricness of it, where you're paying, there's vols so high that you can pay 50 cents, $50, but it's like a $3,000 payout. Only if it could get 150 points in 2 days. Well, that's the interesting thing about those different environments, is sometimes it can. Sometimes you can get 150 points in 2 days. And so,
right, for sure.
Anyway, but yeah, that's it. And then the thing that we are working on right now, like I said, is putting more tickers in. But the big thing that when we first started building it, it was like my first kind of big idea, and it was just it was a lot to get through. We had to get the basics down, but now that we have the basics down, we feel good about it. And it's the idea of a portfolio view, because no one that I know that's actually like a full-time trader just runs one strategy. People are running a lot of concurrent strategies all the time. And so what we want to be able to do is combine these tests and see what the returns would be over time if you ran these concurrent together. And so that's what we're working on right now. We're going to be releasing it in a couple weeks. We're getting pretty close on it. But we're super excited about that, just because you can say at that point, let's say we have a condor that we always have on. We're always selling premium, but we also have a hedge. Well, up until now, you've always had to just kind of separate those out. We're trying to build it out in such a way to where we say like, oh, that would make sense. Like this hedge actually works best with this strategy. So we're excited about that.
Yeah, that's awesome. So I have a link at the top of the video. It's my referral link. If you use that, you get 50% off on the 50% off on the plan for up to a year. So what are the plan options that you guys have now?
Yeah, right now, so the monthly cost is $100 a month per month, or $600 per year. And so yeah, reach out to you pretty early on, just because you have a pretty cool community and wanted to hand that out to you. And so yeah, your users get 50% off their first year of that. And so more or less just to say, we really want it to be, anybody can use it and anybody could lose a crap ton of money with it if they're not careful, like anything. And so we really want to make sure that like we're handing it out to people who are educators, because we want people to be able to come up with good trades from this, and not just, it's not a game. It's people aren't just doing this for fun. People are trying to work towards something. And so we want to make sure it's in the right hands, and that's definitely want to, give a discount to people who are connected to those communities, because they're trying their best and they're working hard at it. So.
For sure. And I know, so you guys use 5-minute data. The only other backtester that I know of that does is OptionNet Explorer. Their annual plan is over $650. So you guys have a pretty good deal, especially for the first year.
I appreciate it. Yeah. And we're not, never say never. 5-minute data was kind of like the minimum thing for us. And we're looking through things. We're looking through 1 minute. 1 minute data provides a lot of challenges, but it's something that we eventually, might look into, but no promises with that.
Yeah. Cause going from 5 minute to 1 minute, that's 5 times the data.
Yeah. Yeah. And you're approaching like 1 trillion rows of data, which is pretty crazy.
Well, cool. Let me see if there are any questions here.
Sure.
But I appreciate you coming on tonight to talk about this.
Thanks for having me.
For sure. It doesn't look like we have any questions, so
sweet.
I think we can call it a night. And if people have questions, you can reach out to me at IncomeOptionsTrading@gmail.com. And how can they get a hold of you, Troy?
They can reach out. I always, support at optionomega.com, but you can Facebook, Twitter, just Option Omega. You'll find us.
Perfect. Well, thanks again, and happy trading, everyone.
Awesome. Thanks, Ben.